Asian markets are largely lower on the first trading day of the new year. China's December manufacturing PMI reflects further contraction. The Gift Nifty also implies a lower start for the Indian market. Crude oil gains around 2%. Brent crosses $78 a barrel as trading resumes after the New Year's weekend holiday. Gold too gains and holds above $2,000 an ounce. TVS Motors' sales surged nearly 25% in December, with two-wheeler sales growing 27%. Royal Enfield sees overall sales decline 7%, while exports are down nearly 29%. And Coal India's production rises over 8%, while offtake is higher by 6% in the month of December. While for Ultradex Cement, India volume grows 5% on a yearly basis in Q3, which is marginally below some expectations. Japan has dropped its highest ever level tsunami alert issued following a series of major earthquakes yesterday. Officials also confirmed 8 deaths, while flight and rail services were disrupted. Thousands of homes remain without power. Hey guys, good morning and welcome to Power Breakfast. I'm Pavitra. Those are the top headlines that we're tracking for you this morning. For Asian markets across the globe, the big news flow that's really dominating is of this tsunami. But a little bit of a relief is that the highest ever warning that is put out for this kind of tsunami, that has been withdrawn. Of course, there are still expectations of that tsunami, but the highest ever warning has been withdrawn. So that is coming as a little bit of a relief. For the markets, however, you have seen pretty much all of them move into the red in just the past 10 minutes or so. What's leading the losses this morning is the Hong Kong markets. Remember, we're also opening after the New Year weekend, right? So it's been a long weekend for most of these markets. Hong Kong right now down over 100 points, so 0.6% gone over there. The Taiwanese index down around 0.2%. And I want to point out, till around 5 minutes ago, they were holding up in the green. Not too much of a gain, but they were at least holding up in the green. Right now, you have everything barring just the Straits Times, which are in the red right now. So Kospi also down a little bit, around 15 points over there. The Taiwanese index, like we pointed out, down around 30 points as well. The Gift Nifty will come up for you. It is indicating that for our own markets, maybe we could see a little bit of a muted start as well. 25 points lower is where we're at on the Gift Nifty. The Nikkei markets, the Japanese markets, are shut on account of a public holiday anyway today. But staying with the Asian markets, let's also listen into some opinion. This comes in from M&G Investments on how they have their pecking order set up in Asia. Listen in.
Money coming back into Asia, it should. Will it? Question mark. If you look within Asia, a lot of money left China last year. A lot of it found its way into Japan. Some of it found its way into South Korea and to India as well. That seems like it will continue. When we speak to investors, when we speak to participants in the markets, it seems like China has gone from being a specialist market to a generalist market back to being a specialist market again. India seems to be going the other way. And if you look at the fund flows domestically and internationally, that seems to be justified, or it seems to be the case. And there continues to be a case for Japan. So if you look at these three largest markets, Japan, India, China, there's a lot going on in all of them. We allocated more capital to each of them in 2023 than we did in 2022. I think, and the China bit might surprise some investors, but we think that will continue for us at least.
All right, that is an important word coming in on the Asian markets, and that's what we're looking at globally. Pretty limited cues right now because US is still shut on account of a holiday, and Japan also, like I mentioned, remains shut. But let's talk about all of the cues that you should track from an India market standpoint. There's lots going on here. So we have our research team here with the trade setup this morning. Vivek, Hormaz are both with us. We'll have Nigel join in just a bit as well. Guys, a very good morning to both of you. Vivek, let me come to you first. It is pretty limited cues across the board from, the global markets, but take us through what we should track from the Indian markets point of view.
Well, good morning. You're absolutely right. India was amongst the few markets that was actually working on January 1st. The rest of the globe were enjoying the New Year's holiday. So on the back of that, what you did see was limited participation, especially when you're talking about volumes. Volumes were quite thin yesterday. Yesterday did see a minor FI sell figure as well. So US and Europe markets were closed. Even crude oil prices, yesterday they didn't trade, but today morning, like we mentioned a little earlier, today morning they spiked up on back of increased worries as far as the Red Sea transportation is concerned. Now, yesterday what actually happened was that both the Nifty as well as the Nifty Bank, both of them managed to go ahead and hit record highs. But after that, especially in the last hour of the trade, you did see a significant sell-off, and on the back of that, you saw gains getting trimmed out quite significantly. Coming to what are the key cues to keep an eye out for? Auto sales. Auto sales presented a mixed picture, especially when you're talking about tractors. Tractors volumes were quite low compared to what the market expectations were. In fact, now there are worries that there could be a negative year as far as FY24 is concerned. The other pack that moved quite significantly was the telecom pack, especially when you're talking about Idea as well as Indus Towers. They continued the surge that we saw from Friday, and you did see significant up move on the back of that. Bharti Airtel actually was amongst the top laggards as far as the Nifty was concerned. What is it that we need to keep an eye out for today? Continued operational updates from auto companies, and also remember, corporate operational updates have come in. Ultratech, etc., have gone ahead and given the quarterly updates. Gift Nifty indicating a muted start for our own markets.
Okay, muted start. Let's see how things shape up after that. Vivek, thanks a lot for getting us all of those cues. Let's talk about all of the stocks that you should watch as well. Hormaz is here. Hormaz, even as the globe is quiet, there's so much going on in the Indian markets, right? You have the pre-quarterly updates which are coming through, the December month updates. So take us through the list.
There's always a lot going on in the Indian markets, regardless of what the globe is doing, Pavitra, isn't it? But so I'll start off with the business updates as you were highlighting. Ultratech Cement was the first one. The overall sales volume for the quarter were up 6% from last year to 27.3 million tons. And the India sales volume and the domestic grey cement volume both were up 5%, either marginally lower than estimates for various reasons as well. Now, Coal India, now their update, now based on the December production, that was up 8.2% to 71.9 million tons. And the April to December production is now up 11% to 531.9 million tons, which is almost 2/3 or 68% of their FY24 target, which was 780 million tons. APL Apollo Tubes, their sales volumes were unchanged for the quarter on a year-on-year basis, but on a sequential basis, they were down 11%. And they mentioned that they're seeing strong growth in their heavy structural tubes business, and the ramp-up of their Raipur plant is progressing on expected lines. Now, Dhanlakshmi Bank, a couple of banks also came out there. Dhanlakshmi Bank, gross advances were up 11.9% from last year, and deposits were up 10.6% year-on-year as well. South Indian Bank, where advances were up 10.8%, and deposits grew by 9.4% from last year. Now, auto sales, a couple of them, Eicher Motors, where Royal Enfield sales were down 7% year-on-year. Exports continue to struggle, 29% decline there in the month of December compared to last year. However, TVS Motors was an outlier compared to all the other auto sales, with the total sales were up 24% from last year to over 3 lakh units. The two-wheeler sales were up 27%. Exports also went up by 8% year-on-year. LIC has received a GST demand including penalty worth 806 crore rupees, and that is for FY18. Bharti Airtel, now they are going to acquire 97.1% stake in Betel Teletech for 669 crore rupees. But remember, this is a related party transaction that they are doing. SJVN has received approval to form 4 joint venture companies in India and Nepal. Gensol Engineering, the board has approved raising 300 crore rupees through various methods. And lastly, Kernex Microsystems, where their joint venture company has received orders from the South Central Railway that's worth 144 crore rupees. So plenty of stocks to keep an eye out for.
Plenty of stocks. Hormaz, thanks a lot for filling us in with all of that action. Finally, I also want to toss it over to Nigel, who's looking at all of the cues from the futures and options space. Nigel, of course, that last hour sell-off was, because of the tsunami warning.
Well, the last sell-off actually told you two pictures, right? Till the final 60 minutes, the markets look quite good. But if you look at the intraday chart, in the last 60 minutes, we just lost our way. The Nifty Bank, we did see a lot of selling pressure, which makes you a little bit jittery at higher levels, though volumes are far from what it was. So maybe the next 2-3 trading sessions as well, we'll see volumes will be subpar, and then we'll get a better trajectory from there on. How are things stacked up, though? The FIs, as we've been mentioning, they've turned net long. Now, sometimes that's not a very, very great thing. You want shorts in the system, and that's the reason why we're not being able to power away to around the 22,000 odd mark. Because if you have shorts in the system, they get squeezed out at some point of time. Currently, we're in a market where the FIs, they're long. 70% of their positions on the long side, 69% to be precise. And in terms of absolute numbers, it's more than 80,000 contracts. On the options data, not too much movement yesterday, so I'm just highlighting a couple of strikes that have a fair bit of open interest, 70 lakh shares apiece. The 22,000 call, on the downside, the 21,700 put. I'm looking at both these two strikes, and I'm punching in the premiums out there. So on the upside, since you've gone to 21,850 thereabouts, and then we've seen a bit of a U-turn, that becomes a bit of a resistance zone. And going by the options data, 22,050. So that's a crucial resistance zone that we're looking at. In the near term, since we have 21,700 put, which has a fair bit of open interest, the premium roughly is around 70 rupees out there. I'm looking at that support number, 21,630 odd. Today, the Nifty Financial Services Index, that plays out expiry, so that could be a one that, an index that could move around. You pulled up a 7-day chart. If you pull up yesterday intraday chart as well, you'll see it was comfortably moving to around the 21,600 odd. And from there, you suddenly saw some bit of selling pressure. So that's going to be the one that will dominate trade, particularly in the second half. Back to you.
All right, Nigel, thanks a lot for getting us all of those cues. We're going to watch for all of these in today's trading session. But with that, it is time for a break on the show. On the other side, we're going to get you a dive into the key watch list of court cases that will be heard in the month of January. There's a whole lot. Stay tuned. We'll be back with that. Hey guys, welcome back. You're still tuned into Power Breakfast. Now, what does 2024 hold for India's economy? CNBC TV18 polled the country's top economists for their outlook on growth, inflation, and how the interest rates could move in the new year as well. Now, 60% of the economists that we polled expected growth rates to be between 6.2 and 6.4% in FY25. So, Ritu is here with all of the key findings of that CNBC TV18 poll. Ritu.
You know, the global economy went through what was a tricky 2023. It took a few punches here and there, but fared okay with expectations of a soft landing in 2024. So in this environment, we asked the country's top economists how they see the economy shaping up as we step into 2024. And here's what our poll threw up. One, the majority of our respondents are expecting the Indian economy to grow between 6.2 to 6.4% in FY25, which is close to that 6.3% mark that the IMF, for instance, has projected. A third even see the GDP growth rate touching 6.8 to 7% during the year. Now, government spending is expected to remain the biggest driver of growth in 2024, even though there have been talks of private capex picking up, rural consumption-led demand picking up, and so on. The majority believes that the government's fiscal deficit will come down marginally from 5.9%, which is targeted for FY24, to around 5.5 to 5.8% for FY25. Now, the rupee has been resilient this past year compared to what we saw in 2022, and going ahead, the majority of our respondents expected to trade between 82 to 84 to the dollar in 2024. Inflation is widely expected to average around 4.5 to 5%, which is still a tad higher than that elusive 4% CPI midpoint, which RBI has been targeting. Now, speaking of RBI, the first repo rate cut is expected in the second quarter of FY25 by most, and even later by some others. And half the respondents expect the repo rate to touch 6% by the end of 2024. The one place where our respondents were absolutely unanimous was the 10-year range. That is seen at 6.75 to 7% by the end of 2024.
All right, Ritu, thanks a lot for taking us through all of the highlights out of that CNBC TV18 poll. But moving on to another important news piece now. The government has announced a new window for the sale of electoral bonds starting today. This is going to be till the 11th of January. The sale will take place at branches of the State Bank of India, and the Supreme Court has also reserved its verdict on the electoral bonds in November last year. Now, electoral bonds is actually just one of the 6 key cases that could come up for hearing or judgment this month. Ashmit is here to take us through the legal watch list that we should have on mind for all of January. Ashmit.
The start of this new year is likely to be a busy one for Indian courts. The very first month of January could potentially see 6 key cases coming up for hearing or for judgment. Number 1, a 5-judge bench of the Supreme Court heard and reserved judgment in a batch of pleas challenging Section 6A of the Citizenship Act. This section serves as the basis for the National Register for Citizens. The Constitution Bench can potentially deliver this judgment this month in this highly polarizing issue. Number 2, the Pegasus issue is likely to rear its head once again in the courtroom. The Supreme Court appointed expert committee submitted its report in August of 2022. The panel concluded that Centre refused to cooperate in these investigations, and of the 29 devices that were shared with the body, there was no evidence of Pegasus, but malware had been detected in 5. Petitioners are likely to mention this case once again before the top court this month. Number 3, another polarizing and political issue, electoral bonds. Petitioners had claimed that the government was gaining exclusive access to donor details. Meanwhile, Centre argued that in seeking transparency, voters cannot claim an overbroad right to know. The Supreme Court reserved its judgment in November, and with the winter break giving time to judges to author this judgment, we may see a decision this month. Number 4, comedian Kunal Kamra was the first off the blocks to challenge the information technology rules providing for a government-backed fact-checking unit. The challenge was issued in the Bombay High Court. The Centre has deferred the implementations of these rules till High Court decides the case. The judgment is expected on January 5th. Number 5, here's a make or break issue for the online gaming industry. GST show cause notices. E-Gaming Federation moved the Supreme Court, challenging notices which computed demand based on the buy-in amount by players. The Supreme Court has issued notice. The entire gaming industry will be watching the Supreme Court on January 8th when the top court hears this case. And finally, number 6, the fate of the Zee-Sony merger awaits a decision from the NCLAT. Axis Finance and IDBI Bank have challenged the merger based on loans that they extended to the SL Group entities. The NCLAT refused to stay the merger in December and will now hear the case on Jan 17th. And with the Supreme Court also due to decide cases such as the Adani-Hindenburg case, the Bilkis Bano remission of sentence case, and police challenging passing of Aadhaar as money bill, 2024 is looking like a busy year ahead.
All right, busy month and busy year. Ashmit, thanks a lot for taking us through all of those cases that could come up for hearing. But with that, some more news. The government has also extended the PLI scheme for auto and auto components industry by a year. So this is going to be up until FY28 now. Eligible companies will get incentives for 5 consecutive years till the 31st of March 2028. Now, according to the amended rules, an eligible company will not get incentives until it meets the threshold for determined sales value in the first year. So that is an important news piece coming in for the entire auto and auto parts industry. But with that, it is time for a short break. On the other side, we're going to talk about all of the cues from the commodity markets. There's been a lot of action there as well. Stay tuned. We'll fill you in just a bit. Welcome back. You're still tuned into Power Breakfast. Let's get a check on how the commodities are moving today. We have Manisha joining us with an update. Manisha, there seems to be quite a rise in the crude prices overnight.
Oh, well, yes. The 2024 has begun on a positive note, and this is after 10% decline that we saw in 2023. Major reports are coming in from the Red Sea is what is adding premium to the prices right now. There are now reports of U.S. forcing strike back at Houthi group in Red Sea. There also are reports of Tehran sending warships into the Red Sea. So this doesn't seem to be de-escalating, and that is what is adding premium to prices. The markets also are looking at stronger demand coming in from Europe and China these winters. It is going to be the U.S. non-farm payroll data that comes in on Friday. That would give you the first cue on how, when, how much of a U.S. interest rate cut can be expected the first quarter of this year itself. Apart from that, the bit of a decline in U.S. dollar index also has been supportive for commodities. So as Asia opens to a new year today, we are looking at more gains than losses when it compares to commodities as a sector.
Okay, so starting off on a positive note, Manisha, thanks a lot for getting us all of those details. But with that, let's also bring you the latest from Japan now. That is the key global story that we're tracking this morning. At least 8 people have died following a 7.6 magnitude earthquake that struck the western coast of Japan last afternoon. Thousands of army personnel, firefighters and police officers from across the country have been dispatched to the worst hit, relatively remote Noto Peninsula. Rescue efforts have also been hindered by badly damaged roads. In fact, rail services, flights to the areas have all been suspended as well. The Japanese Prime Minister Fumio Kishida in a statement said that during an emergency disaster meeting, the search and rescue of those impacted, it is a battle against time. The Japan Meteorological Agency said that 90 tremors have been detected since the quake first hit and warned that more strong shocks could hit in the coming days. All right, very difficult situation there in Japan. We're, of course, going to keep bringing you the updates on this story through the course of the day as well. But with that, we're going to wind down on this edition of Power Breakfast with the news that the Asian markets have actually slipped further, for Hong Kong staring at a 1% cut right now. That has slipped quite significantly. The Gift Nifty implying a near 30-point downtick at the start of the trading session. Thanks for tuning in. We have Bazaar Morning Call on the other side.